What can you tell us about this new equity buildup in Credit Suisse as it kind of tries to get its turnaround track in place? It was Saudi, and now it's another big investor.
Yeah, so last week, Credit Suisse announced that this much awaited plan to restructure its business, trim down its investment bank and look to sell some of that off and refocus the business on wealth management. And to do this, there's an awful lot of restructuring costs involved. The bill came to just under 4 billion Swiss francs. That's around $4 billion US dollars. And to fund this, it announced it was going to do a capital raise. And this is going to be in 2 parts. The first part was going to be a share placement. And then the second part was going to be a rights issue to those existing shareholders. Now, last week, they announced that the majority of the first part, the share placement, was going to be coming from the Saudi National Bank, which is the largest commercial bank in Saudi Arabia, and which is its largest shareholder is the Saudi Sovereign Wealth Fund. But we've uncovered today that another significant investor in that early round is the Qatari Investment Authority, which is also a shareholder in Credit Suisse, owning about 5% of that stake. So the result will be that after the whole capital raise, you're going to have just under a quarter of Credit Suisse shares will be owned by Middle East investors, because you have the SMB, the Saudis, the QIA, the Qataris, and Olion, which is a long-term Saudi investment group, which has owned Credit Suisse for over 20 years.
I guess the next question I have is, there has been a lot of controversy around the investments that Saudi Arabia, other Middle East investors and private investment funds make. We're not even just talking about what the controversy around the Live Golf Tour and the human rights record and everything else and possible sports washing, whatever you want to call it. Is there any threat that with a massive ownership group from the Middle East, like you could potentially have with Credit Suisse right now, that it would reverberate through clients? Would some clients maybe look to do business differently or at all with Credit Suisse because of these investors, potentially?
Well, I suppose with Credit Suisse, they have had large Middle Eastern investors on their shareholder list for, as I say, for going back a couple of decades. So the fact that that's going to grow and become a larger Middle Eastern shareholding block, that may create some problems for clients. But I think Credit Suisse has been quite vocal for some time that it would like to see more business in the Middle East. It's talked for a while about that being a real growth area and its special area of wealth management. It'd like to double down the area. Last week it announced there'll be 9,000 job cuts in the next 3 years across the group. But just a month before, it was talking about hiring an extra 100 or so people in Doha, in Qatar. So it has actually been quite vocal that it sees the Middle East as a growth area. Its chief executive was saying just last week that this is going to be one of the biggest hotspots over the next 10 years. So I don't suppose it's going to be too much of a surprise for Credit Suisse's clients, though I suppose some people who may be a little bit more squeamish about some of those ties may look to pull and to switch elsewhere. But I think there's probably already been quite a lot of movement in the last year or so from their clients to other large wealth managers.